All right, what's up, guys? Good morning. Happy Sunday. Happy Labor Day weekend. And we've got the day off tomorrow, so we got to wait a little bit more. But yeah, I'm looking forward to the week ahead, the month ahead, the end of year push. But yeah, with a new month in the books here, I'll go through a few things kind of with that top down point of view, and we'll kick it off here with the cues on the monthly chart. And nothing really changed here, right? Good trend, good structure, good momentum. The score of 15. Bulls have the monthly chart, and then for the QQQ off the weekly, that's also really bullish. Just one little observation. We put in the bottom back here in April. Right, from the bottom, they kick off a modest little 40% rally. We haven't gotten a pull back to the weekly 21 just yet. Doesn't mean we have to go from 570 right down to 540. But worth noting. And then for the daily chart here, so this is what I think made August kind of a tougher month for big breakouts, big continuation. Compare the month of August to the month of June, July. All right, back in July, you have the perfect daily squeeze, great structure, good trend. More importantly, good momentum. What's usually going to be easier to trade? Well, you have your May until July period, and all throughout that, you have good momentum behind you. Then we roll into August, and the picture here at Friday's close, pretty much a picture of the entire month. We keep really good structure. EMAs are stacked positively, 21 above the 50, 50 above the 200. We have good trend. We have no momentum. And again, we had momentum from April, May, June into July. MACD breaks back below zero. And again, doesn't mean the market has to fall apart. If they keep good trend and good structure, we shouldn't fall apart. But when the gas tank goes dry, you do tend to get a lot of this, right? They pull it back, and they pop it, and they go for the breakout, and they pull it back, they pop it again, we gap up, we pull back, versus more of that clear direction of pull back to your buy zone, get a squeeze, the easy stuff. So I think a big thing here for September, if we don't get that back above zero, we don't get the old Momo shift. Again, doesn't mean the market has to pull back. Could pull back, more importantly, the idea of buying more of the Google, the Amazons, the Teslas, trying to call for a breakout on those Big Ten names. Tough without the QQQ. And then from the ground up, it's just really neutral. We have the lower time frame blues. 5-minute neutral, 15-minute neutral, bearish on the 30. The dirty 30, neutral off of the hourly, neutral off the 2, the 4, and the daily. So bigger picture, nothing changed in August. Your monthly chart is bullish, your weekly chart is bullish, and to be fair, the daily chart still leans bullish. But that one little ingredient, momentum, that can really hold your market back. So key here for early September and the month in general, is this week going to be something where we hold 570? They keep it on the launching pad, and then we get a 15-minute buy trigger. Here comes a 30-minute buy signal. Here comes the hourly buy signal. At that point, I think you play for a pop. On the other side of things, if we take out the daily 50, then the market maybe pulls back to that weekly 21. But I think for the most part, cues are pretty sharp here, bigger picture. And then the same point of view on the S&Ps, the spiders. Monthly S&Ps, 15 points, trend structure, nice and bullish. Weekly S&Ps, again, like your QQQ, really bullish. But we should factor in at some point, you will pull back to your weekly 21. Or a better way to look at it, at some point, price will meet back up with your weekly mean. That could be the quick flush back into, call it 6150. Could also be a case of we just chop for a few weeks, they pull the 21 EMA higher, and then you have your reset. But that chart leans bullish, and then the daily S&Ps. Again, what's easier to both day trade and swing trade? I think more of that kind of market behind you. Big time momentum, they rally, they pull back, they hold support. They chop, they squeeze, they push, they pull back, they push, and then the month of August is just a little dip. They think about the breakout, they pull back, they think about it again. It's bullish, but not in a fashion where they're making the immediate, all right, wake up, buy the call, hit the beach, come back and take my paycheck. You can kind of get that market back here. We lose momentum, a little tougher to get it. And then from the daily down to the 5-minute, you have nothing but the blue. No immediate sell trigger, no immediate buy trigger, which can make for more of a hurry up and wait kind of market. Again, you take a daily chart with a 13 out of 15. Thinking should be initially, I'd rather buy that. I don't want to be in a big rush and get short, and then I'm fighting the structure and the trend. But to want to buy that, we're looking for 15-minute confirmation, 30-minute, little love from the ground up. S&P's bigger picture bullish, short-term neutral. Neutral at support. And then quick peek here at the almighty Dow Jones. A little bit more oomph here to the Dow. 15 points on the daily chart, 15 on the weekly chart. And I would imagine, with that being said, 15 off the monthly. So if anything, if Dow Jones keeps on being leadership index-wise, maybe Tuesday we're looking at the 1 hour, 30-minute, 15-minute, or 5-minute squeeze. Dow looking pretty good, and then the Russell. I think in terms of, call it Q4 setups, it's a really interesting one here. Granted, maybe not as sexy as some Tesla, Nvidia, Google, Meta, but it's a pretty bullish monthly chart. Big squeeze, got the green arrow at the buy zone. 15 points to structure. Would point towards the eventual path into like 270, 275-ish. That one is interesting. Weekly IWM. 15 points and your first weekly buy trigger since, wow, your first weekly buy trigger of the calendar year. Way to go, Russell. And then the daily IWM. So again, your Dow Jones, your IWM. Short term, a little bit more strength behind them than the S&Ps and the Qs. We'll look at the board here in a minute. I think it goes Dow, IWM, S&Ps, and then the Q-tip. The Q's in last place. But yeah, so one more here would be the Big Ten basket. Our little index. And we'll go to sectors. All right, how's this bad boy looking? And if you guys don't have the code for it, let me grab it and put it in the chat. What's up, Dion? What's up, AJ? All right, if you guys copy and paste this ticker, that big old ticker into your ticker search box, there's your Big Ten basket. These 10 names in a weighted little ETF. And that being said, monthly off the Big Ten would be, we don't have enough data, it's bullish. 15 points. Okay, the weekly Big Ten basket. No change here for the month of August. Good structure, good trend. Full 15. And then the daily Big Ten. Worth noting, beautiful 2-day squeeze. Could like that one. But then the daily off the Big Ten. Big daily squeeze. Structure's bullish, trend is bullish, momentum is bullish. We get that on the Big Ten basket, we got to get aggressive. All right, and they go for it again. Right, looks like you break out. Then you flush back in, then you lose momentum. So for the most part, the entire month of August, with the exception of maybe a few days, you're lacking momentum. Excuse me. One moment. Take two. When you're lacking momentum, it's tougher to get that kind of action. All right, I can jump in. I can look for a daily squeeze in Meta. I can buy the calls 2, 3, 4 weeks out, and I've got some good action behind me. The month of August, you're taking the 30, 40 day till expiration. I was going to say Google. Google's been pretty good. But the Meta, the Microsofts, etc., not as easy. We should pay attention to the fact, though, that we do have a 2-day, a daily, a 4-hour, a 2-hour, an hourly 15-minute, and a 5-minute squeeze on the Big Ten. More of a bigger picture conversation. Let's keep a good focus here on that 2-day squeeze. When I think back to my Q4 of last year, in a nutshell, that was my 6-figure month. And I'm taking the Apple trades or buying Netflix, doing the Google, AMD, Nvidia. But that collective basket with that weekly squeeze, there's the pitch. Energy being built up, perfect trend, good structure. Everything points towards a big rip. Then we figure out, all right, well, I'm not going to go buy all 10 of them. Who's the strongest, who has the best squeezes, best structure, best alignment? Then you go for it. Point being, what if our 2-day squeeze goes and does that? Doesn't mean all these names break out and explode, but maybe it's going to be Google, Amazon, Tesla. Maybe it's going to be Apple, Microsoft, Broadcom. Should be a few. Would rather buy that 2-day squeeze. Well, we can't buy that. I wish we could. In terms of a good trigger to go buy a few of those names, again, love the 2-day squeeze. Lower time frames are, lacking the colorful action. But all right, quick walkthrough of the indexes from the monthly down to the daily charts, lower time frames. And I think the theme here is just kind of bigger picture, really bullish. Go through the monthly, go through a weekly. And granted, your daily charts are still bullish. It's just you take that 5-minute, 15-minute, 30-minute, 1-hour point of view. End of summer, everybody, all the hedge funds out on their yachts. A little bit choppy. But all right, to the board we go. And the board would kind of confirm a little bit of that. Yeah, you're bullish, but not wake up and put your entire account into calls bullish. So we've gone from a bullish ranking to neutral bullish. Does not mean you're waking up Tuesday and you're trying to buy puts on everything. And I think that's really saved our ass a few times. Take the S&Ps, for example. Or really the entire market. That little kickback, that pullback, that flush. At no point since March have we seen the sheet lean more bearish. Indexes never flip bearish. The overall scores never flip bearish. Doesn't mean you jump in and blindly buy every flush, but if the bigger picture remains bullish, you look for a day trade short, you scalp it. Major goal should be, when can I buy at support? Then the day will come, things change, market breaks down, you'll have a different leaderboard. But that's pretty much kept us away from the swing shorts. So back to a neutral bullish market, that translates to be patient. And then index rankings would be, again, the Dow Jones, the RSP, the Russell, the S&Ps, and then a neutral QQQ. Again, can make for tougher ideas in, Amazon breakout, Tesla breakout, Google in the 250. They need a really good QQQ. And then these sectors, silver and gold looking good. Communications, I think right now XLC's got to be a lot of Google. And we have the Google, followed by real estate, energy, materials, and financials. So they're pretty bullish. And then, these guys all more neutral. Transports, biotech, industrials. Here's your big tech ETF. The XLK at a big 0. The SMH at a -2, and the Cathie Wood at a -17. Bitcoin being your weakest. And that can play a role in a quote-unquote neutral bullish market. We're looking here, and hey, there's really good bank stocks. You have gold, communications, real estate, energy, materials, financials. Like we looked at last week, those aren't your big, heavily weighted names. You've got, 3, 4, 5 names make up like 30+% of the S&Ps and the Qs. What are those names? Those are your Googles, Apples, these guys. TSM's got a -28. Meta's got a -22. Netflix at -19. Nvidia, right? Nvidia's a huge piece of it. Negative 14, Microsoft at 0, Broadcom positive 12, Tesla positive 19. You've got three names really trying to show up here: Google, Apple, and the Zon. But again, because of their weighting, these guys get neutral. Yeah, you can have a really strong material sector, energy, real estate. These guys keep on chopping, they pull back a bit, puts pressure sometimes on everything. By default, you have selling in these names. It will put pressure on the S&Ps and the Qs. They have to buy a lot of real estate, energy, materials to try to offset that. So all things to keep in mind. And for the Big Ten, I would like Google. Add that to my focus watch list. Of course, would like the Apple. We like Amazon. We have some Amazon. And then, not in a big rush to buy more Tesla, but we do have some Tesla. All right, I'll put those guys on the focus watch list. And then sectors-wise, I don't trade silver. But I will dabble with some gold futures. I like gold. I think we got XLC covered through Google. I don't really trade real estate. I don't love trading energy. I don't love trading materials. And here's the thing with our leaderboard. We'll talk more about it as things kind of roll out. Follow the money, follow the pretty colors. Also have some discretion. I've never really enjoyed personally trading energy names. Nothing against energy stocks. I just find they look good for a few weeks, few days. And then as soon as big money wants to go back into big tech, big chips, energies, industrials, it can kind of get a little flimsy. I don't take that bias and go blindly short them, but I want to be a little picky. So if we have a handful of good-looking groups, and I do like trading the financials, I like trading communications, gold. I don't need to worry too much about real estate, materials, etc. You can look at them, see what's setting up there, but have a little discretion. So yeah, I'll take the financials as well. And I think that'll do, Pig. Gold, Google, financials, Apple, Amazon, Tesla. And now if we go jump over here to the main list. All right, let's go say since we're in a bullish market. Not in your face, buy everything right now bullish, but overall bullish. Not really trying to focus too much on the short side. So I'm going to say show me names within 80 or better. 80% of their best score. All right, now we are left with these 29 bad boys. American Express, MasterCard, Gold, Dow Jones, ABBV, Morgan, Google, AT&T. A lot of banks, a lot of energy. All right, now we can narrow it down from there and say, all right, well, I'm not too interested in energy. But I am interested in communications. I am interested in financials. And then we'll grab tech. All right, now that still follows that process of market, sectors, leadership, but I've kind of narrowed it down to things I like to trade. And the theme here would be mainly financials, right? AXP, MasterCard, Morgan, APP, BK, Capital One, JP, Melli, BAC, and the financials. Now, what I don't want to go do on Tuesday is buy 5 or 10 bank stocks. So then we can say, all right, out of all the banks here, who would be the weakest? Using that term weak relatively loosely, financials at 80, and then AXP has a 92. They could all work. So what we do now is say, all right, did that process of market leans bullish, I want to focus on the buy side. Go through the indices, who's strongest, who's neutral. Go through our sectors, now we're down to 2, 3, maybe 4. Then do the work of, all right, in the gold basket, in the financial basket. And if you want to go trade real estate, energy, etc., then figure out in those baskets who's the best in show. That being a combination of the overall score and the quality of the squeezes. Okay, so for a few of these, let's go to... We'll do a fresh one together. All right, so create watch list, and we'll call this Tuesday. What's Tuesday? The 2nd? Already September. All right, so we want to add some AXP, and we want a little bit of that MA, Morgan Stanley, the XLC. Google we have, and then what about AT&T, App Lovin'? All right, a couple more here. But now I figure out who has the best squeeze and the best entry. JP Morgan, Smelly Melly, BAC, and the financials. All right. Cool. So, there's our Tuesday morning watch list, and let me add our trades here. Google, pretty off the monthly. We have the Amazon in a 2-day and a 3-day squeeze, and Tesla. And then some Apple. All right, there we go. And again, how did we get here? Process shouldn't be, let's wake up, run the scans, look for a daily squeeze, look for an hourly squeeze. If we get caught up in that, we take more of the Kroger trades. Like, hey, the semiconductors are the strongest sector in the world. Broadcom is the strongest stock in the world. But the scan result shows you Kroger, and you're buying Kroger. We could do way better. So, overall market context first. Should I be bullish? Should I lean bearish? Should I be leaning towards walking my dog? Really neutral. From there, the indices. Is it a QQQ market? Is it more of a Dow Jones market? Small caps lead the charge. Then you break down your sectors. Am I looking to buy the financials, big tech, big chips? Am I looking to short healthcare, energy, real estate? That builds your context. Then you drill down from there. If you have, say, SMH, healthcare, energy, now go dig throughout those groups. Who's the strongest? Who has the best squeeze? All the above. That left us with these, 10, 15 names. And then, of course, by default, which ones will catch our focus initially? The bright ones. So you have, let's see, the 4-hour on MasterCard, the hourly on JP Morgan. What's that? That's the hourly on the financials, the 30-minute on Google, and then, of course, the 2-day squeeze here for the Tesla. So those ones, being that they have the bright green A+, in theory, we could jump in there and buy them immediately. Squeeze setting up full 15 points. It's your A+ setup. Really good entry. Now compare that to maybe the weekly for MasterCard, the 2-day squeeze for Morgan Stanley, the 1 hour for Morgan, daily on BK, 2-day on Capital One, and the monthly for Google. They fit the same bill. Squeeze setting up full 15 points. They're still A+ setups. But unlike the 30-minute chart for Google, these ones aren't really near their buy zone. Or they're near their buy zone, not as close. Again, these ones you could, in theory, jump in, buy right away. The darker green, little discretion. Darker green might be a good entry, it might be a decent entry, it might be an awful entry. The bright green ones, top shelf. And then blue is just a squeeze, right? Might be a little bullish, might be more bearish. We could go look at the 3-day squeeze here for Amazon. And yeah, it's bullish. 11 points, good structure. It's not the full 15. So for starters, let's go look at maybe the whole financial theme. And look, if you have a theme of, in this case, strong XLF, strong Morgan Stanley, Goldman, BAC, do take consideration of buying the ETF. Kind of covers all your bases, and then say you buy Goldman, and for whatever reason, Goldman has bad news and gaps down, and then Morgan Stanley, JP Morgan, BAC, they're all gapping up. You were right on the group move. You picked the wrong name. So for the XLF here, let's see. We have a 2-day, an hourly, and a 15-minute. All right, what is popping on the 2-day squeeze? Oops. Again, so little discretion's required here. You have the darker green, not the bright green. All right, so we check out the quality of the setup, and again, checks every box. Compression, great structure, white arrow, 15 points. But here's a spot where you're maybe going to get long around 54. Your target is about $1 higher at 55. So there's your dollar of risk. Then we have to factor in, where am I wrong? That conversation is usually down here on a break below your 21 EMA. So it's a spot where I'm buying it at 54. I maybe catch the $1 move in my favor, or I maybe have to sit through the $2 move against me. What's my preference? Catch it right near that 21 EMA. Right, you're buying it around 52 and change. You take on less than $1 of risk in exchange for $2 of upside. Again, that's why our Google trade, it's my fault. That's why our Google trade entry should have been where the indicator said it should have been. 25% lower around 180-ish. When we had the green arrow, not the white arrow. Better yet, Google had a weekly squeeze. And look at the weekly squeeze gave you, another green arrow. Got to get him at the sweet spot. So that means what? Could I jump in? Could we get long the financials all the way up here? We could. But I think you have to cut back your size, give it all the time in the world, and try to buy more on the flush. So now the shorter term time frame, the hourly, keep a close eye on that for Tuesday. Never mind XLF itself. They take that and break it long. Look for a trade in JP Morgan, Goldman, all the above. At the same time, they take that 1 hour on the XLF, they break it short. Be careful trying to buy the Goldmans, Morgans, etc. But again, if you can buy the group, you buy the group. So that could maybe be a trade for us early in the week. All right, I like it. And then JP Morgan, I think you had the same thing here. Yeah, have to like it. Good structure, the green arrow. The fixins for the push-in. And again, a few more here in the banks. There's a 4-hour on MA. Ooh, it's a nice one. It can do good things with a good 4-hour squeeze. All right, I like that one as well. And then we have, yep, JP, BK, Capital One. So we'll see what's up for Tuesday's open. Initially, I like JP Morgan and XLF. Kind of captures the spirit of the group idea. And then beyond that, we have what? We have some neutral squeezes here for AT&T. And look, if you want, you can go look at them. And we can go bask in in all their neutral glory. I'm not gonna trade them. They might have 13 points, 14 points, 14.5 points. What can I trade right here, right now? It's going to be 4-hour chart on MA. Hourly JP Morgan, hourly XLF, and then a little bit more my flavor. 30-minute here for Google. So for our December 250 calls, again, not too much ado here until we either rally into 240, 250, or we pull back into like a $1.80. Then I'm jumping in and buying more. The crime here will be if they take it from the entry to that big target. We'll take the profit, of course, but I'm gonna have to look back and say, damn, that was one of my that was my go-to pitch on one of my favorite names on the biggest time frame, and I'm showing up about $30 too late. For the ideal entry, I can jump in, take it with full size, or in this case, with bigger than average size. Never mind bigger than average, I have a third of my average. White arrow entry versus the green arrow entry. I'm long up here. They gap the thing down 15%. I have to like it still. I'm long back here. They gap it down 2%. I can cut it and move on. But I'm liking our trade there. And then for maybe a shorter term play, we shall see what's up. But yeah, good looking 30. That's a good looking 30 you got there, Google. 15 points makes for an A+ setup. Entry all proper. I like the Google. And then we also picked up some Amazon last week with the October call debit spread. And for that one, I have about half my average size. So for our 3 open trades, just from a normal size point of view, I need to buy more to get there. That being said, they are the kind of things where I would like to be a little bigger than average. Week by week. But yeah, for Apple here, or Amazon, excuse me. Pardon me. When we bought it, we did have the white arrow on the 2-day, or the green arrow, rather. They lost it by the close. Overall, pretty bullish. 3-day squeeze looks proper, and then the 2-day squeeze. Frankly, where would I jump in and buy more Amazon? If they could turn back on the 2-day trigger. Then I'll jump in and take more. And then 15-minute is just That's an 15-minute. But I'm liking our Google trade. I am liking the Amazon trade. And then, despite the flush back on Friday, I still like that Tesla trade. Want to buy more of it. 2-day squeeze, we still have our trigger, so no change there. The 3-day squeeze, on that one, we don't have the trigger yet, and then I think the big one eventually is going to be the weekly. Good way to look at it. We're never going to get the 400, 420 right now if they can't go and fire the weekly squeeze. So in the short term, what's their best chance of trying to fire that weekly squeeze? First, go fire the 2-day. Wake up the beast. Then go fire the 3-day squeeze. Then work up to a weekly. 2-day squeeze gets you into 370. 3-day squeeze gets you into 400. Then they wake up the weekly squeeze. Then you're cruising towards 420, 425-ish. One after the other. I will buy more Tesla from either lower, a little bit more of a dip, or I would buy more on the weekly trigger. But that's pretty much it, guys. Final one here at the Apple. The big fruit. An Apple. Apple doesn't have what Google, Amazon, and Tesla have. Big monthly squeeze setting up a weekly squeeze, a 3-day and a 2-day squeeze. Only a 15 and a little 5. But here's the thing. Apple ranks out pretty good. Right? Must be respected. Apple came in second place. So for Tuesday session, if the QQQ can heat up, you have good internals, SMH getting better. If they turn that 15-minute squeeze into that 15-minute squeeze, that can make for a great, weekly expiration trade. Key being, can we get that trigger? Right. 15-minute squeeze back here kicks off on around 1:30 p.m. on the 27th. You don't get your trigger until about 10:45 the following morning. And then what happens? They take it and they break it out. Your new 15-minute squeeze, you got that about a half hour after the open on Friday. For the entire session, Apple is stuck in a 15-minute squeeze. What did we never get? A trigger for a long or a short. No green arrow, no red arrow. Now that blue arrow, there's our slingshot. The slingshot signal says, hey, you have really good trend. You got some really good structure. Big squeeze setting up. You need momentum. Apple never went and got momentum. but that could be a good one. So as a recap there, market is neutral bullish. Bigger time frames, your monthly charts, your weekly charts, they're in great shape. Lower time frames like 15, a 30, a 5 minute, they're all kind of neutral. What is also neutral is a lot of your Big Ten names, TSM, Meta, Netflix, Nvidia. Them being your market-leading, more heavily weighted names. Yeah, you can have a really strong real estate, energy, materials. If these names get weaker, it'll have a negative impact. They just kind of hold their ground and chop. Yeah, then you can get nice action from real estate, energy, materials, all the above. If they can't hold stable, then things can get a little ugly. And then we narrowed it down to a few names here, good handful. Right, based on the market context, based on the sector context and rankings. A lot of the banks and some Apple, some Tesla, some Google, and some of the Amazon. And that is that. The key from there will be index-wise. Can anything show up here as far as a buy trigger? Daily charts lean bullish, and they're both near the buy zone. We can work with that, but the picture they're painting from the ground up right now, 30 neutral, 15 neutral, 5, 1, 2, 4, that's tough to work with. Tough to buy in, tough to short. Q's painting a similar picture. But I, for one, am looking forward to the summer coming to an end trading-wise. Hopefully better action coming up. And again, I think you look at a few of these monthly squeezes, weekly time frames. A few things could be really gearing up for a big move in the Q4. Google, SMH, XLK, Amazon's got some big squeezes setting up in Broadcom, Nvidia. All the household favorites. Should be a good Q4.